Hello, it's Richard Bowser here from Property Investor News, and I'm here today in Boreham Wood with Stephen Wasserman, who is the Managing Director of West One Loans. Good afternoon, Stephen.
Good afternoon.
Stephen, tell us about your company. What is it that you do?
We're a mortgage lender in essence, operating predominantly in the specialist market. So our heritage, we were founded in 2007, so 11 years ago, on the proviso of short-term lending, so bridging finance.
Right.
So we were looking at bridging the gap for predominantly property professionals who needed quick access to capital, whether it be via an acquisition of a property, whether they needed to pull money out of an asset, whether they were selling their existing property while they're buying a new one. And we entered the mortgage market through that guise. Since then, the business has grown significantly. We are now partly institutionally owned, so we have institutional investment within the business, which has helped grow us to expanding our product range. So we've recently launched a long-term second charge product.
Right.
We have moved into the development finance market as well.
Now, you mentioned short-term lending. Can you just describe to readers and maybe people who are unfamiliar with bridging finance as an example, what that means and what you offer? What are the products?
Yeah, it's in terms of what it's for, it's to bridge a gap. So as the namesake suggests, so it could be that you're buying property at auction, you need to complete quickly, but we will lend on a variety of assets, so it's very flexible, and it's more asset-based lending. So we'll look at lending on commercial property, we'll look at lending on land without planning, land with planning, obviously traditional residential property as well. We'll do large loans, so we'll do loans 15 million, and it's a very flexible product. It's charged monthly, and in terms of the pricing of it, it's relatively competitive when you look at where it was 10 years prior. So we'll go out at rates from 0.55 a month. You're looking at 6.6% per annum. So there are fees attached to that, but the fees aren't extortionate. When you look at the mainstream market, we'll typically charge 2% with no exit fee. Right. So it's a product that's competitive and useful when used in the right way.
So providing an investor, landlord, developer has got a scheme where the numbers add up and there's enough meat on the bone in the deal, then they should look at it from the perspective of that's the cost for accessing this product, and if there's maybe a 4 or a 6 or a 9 months to achieve what they want to do with that property, then that's the product that fits the need.
Yeah, I would agree with that, and it allows people to acquire property they might not have been able to acquire. So if they wanted to go to more of a mainstream lender to acquire the property, it might be a time issue, it might not fit the parameters of that lender, where there's more flexibility with bridging finance, and if they're going to be making 15, 20, 30% on the deal, and they factor in the cost of bridging within that, it can be a very useful product for the property professional.